Peter Rose, Longwood Currency Trading. It's mid-July of 2021. Kind of a rainy, foggy day in New England. You might wonder about the title of the video, the 21 to 34-year-old age group. Pay attention to what I'm going to say. Listen, I think a huge target audience of mine is that 21 to 34-year-old age group, that serious group of younger folks that's looking for some clarity in how you view the currency markets or life in general. I'm 72 years old. I spent 50 years in the martial arts. I've had a 40-year career as a real estate investor and a 33-year career as a senior software engineer. Good use of my physics degree, right? So I've been around the corner a few times, and I've been successful in quite a number of things, and working on the currency trading as an alternative to the real estate that I got out of for a lot of reasons that you can find in other videos that I've done or some of the blog posts. But I bring a different view of the currency markets to bear on those that care to follow me and subscribe to, or at least watch the videos that I do. It doesn't matter whether you're subscribing or not. Subscribing shows me that there's actually people out there that are concerned about what I'm doing as opposed to just the number of views of the video I get. I don't expect to have substantial views because I'm not selling Lambos or pie in the sky trading or whatever. Most folks don't want to listen to that shit. But if you're in that 31 or that 21 to 34-year-old age group and you do listen to what I'm saying, this is life as you should look at it. This is life as you should know it. I want to tell you a story first. When I was growing up, my folks didn't have me until later in life. They had my brother. My brother was 20 years older than I was, and so they thought as he was moving off to college, oh, what a wonderful time we've had with Alan. Let's have another child at 45, 35, whatever it was, 45. And they got me. And but as a result of that, and having parents that as I was moving into college, my folks were at the peak of their employment and were looking at retirement. And so I got to see what the transition from a successful life was into a retirement life. They weren't millionaires. They did well in their life. My dad worked his ass off. They never took they came up out of that Depression era. And so when they retired, they had the funds to, when they sold their house in Chicago, to retire out to Southern California. They had the money from that house sale to pay cash for their home in a beautiful retirement community in Oceanside, California. And so I got to see what hard work was all about, why you did that, and what the fruits of that were. Now, yes, you can have you guys in this age group saying, well, you don't know how long you're going to live, and so I'm going to go to the max, I'm going to live and have all these experiences, and I'm going to do all those things because I might not be healthy enough or alive to appreciate all this stuff. And I subscribe to that as well. But the problem is, what if you do live and you are my age right now, 72, and you don't have any fucking money? Now what are you going to do? You're going to have a hard time. You're going to have more than a hard time. You don't want to know what kind of hard time that is. If you're in that 21 to 34 age group and your folks aren't retiring comfortably, if you had to pull the plug right now on your life and stop working, maybe because of a physical problem, you just can't take the pressure of the work anymore, or the work just isn't freaking there. You know, as a software engineer, when I got to be 50 years old, I started noticing age discrimination in software engineering. You think you're going to be lugging wire as an electrician around at 55 years of age? My electrician, he didn't want to do that anymore. He's looking to retire. But he has his own business, so he's going to be able to. What about the guy that doesn't have his master's license? What about the carpenter? You know, my wife worked 60-hour weeks for hard work. And today she still works hard at stuff being retired. But instead of massive flower gardens and vegetable gardens that she's had in the past, we have small plots of them. If you've seen the movies, you've seen the nice gardens that she started in the 4 years that we've been here at this house. And so they're starting to bloom and go, but she doesn't want to plant a sustainable living garden. And we don't need that yet. We're fortunate. But I saw the vision from my folks as to how I wanted to have my retirement. And that didn't mean I needed $20 million to do that. They didn't have $20 million. They didn't have $1 million. My dad was in the age group where there were pensions. He had a Navy pension from a small one, and he had pensions from a couple of jobs, and then they had Social Security, and they had their savings. And so they were able to go out to dinner whenever they wanted to. They could buy a car if they needed a car. They owned their home free and clear. They didn't have any problems paying any bills. They had money saved up. And when they passed on, and they lived well. And there was a little bit of money left to pass on to myself and my brother. Not much, but it was something. And they didn't have to do that. There was money there that they could have spent if they needed. And it was nice that they were able to pass that on. So where are you in your thought process? Maybe you don't want to leave your kids any money, and that's fine. I don't think kids need to be left, $1 million. Do you know that the average age of inheritance is 60 years old? So, you're looking at your kid being 15 years old, and that's what your life insurance is for, not for your asset growth. Because by the time your kids get to be 60 years old, they don't freaking need your money. They've already made their way. They've already been successful. Unless you pamper them and they have been out wandering the world blindly, not worrying about where their money was going to come from, traveling the world in a friggin' camper van, living on $18,000 a year that they cobble together from, I don't know, YouTube videos or work. There's a marvelous book written by Lynn and Larry Parody called Sailing in Seraphin. They built Seraphin, a little 23-foot sailboat. They built it from scratch with money they had saved. They traveled all over the world for, 15, 20 years. Beautiful book, Sailing in Seraphin. And everywhere they went, they'd stop there maybe for 2 or 3 weeks, and they would do work, whether it's fixing other people's sails or working on engines or whatever. They worked, they made enough money so that they could buy food and go on, and they didn't have to tap into their savings. So someday, when they had to sell their boat, there was money there that they could retire on and sell the boat because they didn't need the boat anymore. And so there was a plan. They had a plan. A lot of the folks today that we see are just wandering around, living from month to month, and not building any savings with no plan, just living the good life. You want to pay $400 a month renting a Lexus because you can, that's your option. You can do that if you have something like currency trading that you can do anywhere at any time with any amount of money. You can't do what I did 40 years as a real estate investor. I held buildings for 20 years. You kind of have to stay in the area where you have the properties, unless you have so many properties that you can hire management companies, and they're going to take 15% off the gross without even thinking about it. The reason that you invest in real estate is so that you have cash flow to bring the building through and to pay you a monthly income, and you have the building appreciation. If you're paying 15% of your gross, not your net, your fucking gross, you're not going to have very much cash flow. And so when that building needs $20,000 roof put on it, I just had my roof here, and I've got a 1,250 square foot, 1775 antique cape that we retired into, paid cash for it, and no issues. But I just paid $15,000 to have a metal roof put on to the house. So where are you going to get that money when you retire? Where's that going to come from? In the real estate investing that I did, you have cash on cash money that's not only paying you income as you're going through, but that's providing money to buy another piece of property so that you have these multiple properties appreciating. So when you pull the plug and get done, you're going to time that at the right time, not when the market has suffered a 40 or 50% depreciation in the real estate. And if you're leveraged up too much, you're going to lose your property. I lost $1 million net worth twice in my life, but I never lost the base asset that the $1 million net worth was based on, because I wasn't levered up. The most I was ever levered up was 39%. That was the most I was on any property that I had, because I knew the rules of the game. In currency trading, if you know what you're doing, you can lever up and trade it at 50 to 1. That's fine if you know what you're doing. Well, if you don't know what you're doing, you'll be part of the 90% of the people who lose 90% of their money in 90 days. I did. That's what happened to me, because I didn't have a mentor when I started trading. I didn't have a vision of somebody sitting there and showing me what those steps were. What does it look like, and how much do you need in order to provide these? Nobody talks about that. They talk about, oh, you do this and I got my secret sauce bat fucking pattern, and you're going to be successful and you're going to make $1 million out of your $10,000 account. Sure you are. That's why 90% of you are sucking air at the end of the year. If the education that was out there was valid, and all the books that are written were valid, why do 90% of the people fail? Because that's all the information that you have is friggin' videos and books and educational courses. They're not any good. Because though the people may be successful in what they've done, they don't know how to teach. And part of the reason they don't know how to teach is they didn't learn. They didn't have the broad view of what's important. Some of them had mentors. Usually the folks that have mentors aren't teaching, they're just passing that on to a select group of people. They're not out there acting as traveling salesmen for courses and training and all that stuff. Look, I'm retired. I'm not going to sit there and answer emails or run around the country doing seminars and shit or all that crap for trying to get hundreds and hundreds of people on my team. Because at a certain point you develop a scale where there's so many people that are involved, you can't pay any attention to them, and so all they get's the information from you. And the information, boys and girls, is not enough. I think that's why the 50 and up age group, I'm having such a difficult time working with those folks, trying to get them to see the benefit of the currency trading, because you get some guy that's been a carpenter or a mechanic for his whole life, and now you're in age discrimination, or your knees are giving out, or whatever it is that's happening to you, and you can't open your eyes to it because all you're doing is clouded with fear. My knees are going. What am I going to do? I can't do plumbing now. You can't be a plumber when your knees are bad, because plumbers got to kneel down a lot. Age discrimination. You know, I'm a mid-level executive in a bank. Well, that's great. The next time the banking crisis comes around, your ass is out the door. If you haven't been there long enough, where they've swept the floors, it'll come, and you'll be the guy that gets out the door. Where's your backup plan? You know, in the mortgage crisis that hit, it affected everybody. Everybody lost their jobs. You could see the movies of all the suffering and stuff. People that have been with companies for 15, 20 years, that were in their 50s and 60s. Boom, out the door. And these are the folks who were living in the too big of houses, levered up on the houses, buying the Lexuses, riding around in fancy cars, going out to dinner 3 times a week, living the good life, and all of a sudden, they don't have any cash savings. They've got retirement savings if they were smart enough. Oh, why should I take 20% of my income and put it into a 401k? Because I need that money to pay for my lifestyle. So their 401ks weren't big. They didn't have alternate investments because all their money went into the fucking house. You're paying $2,800 a month on a mortgage, and then you're adding another $500, $600 a month on taxes and lease car payments. Man, you're going to be making a couple $100,000 a year to support that life, unless you're all levered up. And then when the final bill comes due, you can't handle it. You lose your job, and you're 6 weeks, you're gone. You know, the next time we run into a pandemic, or not a pandemic, but a financial crisis like we're coming through with this pandemic, the COVID-19 thing, there isn't going to be forbearance on mortgage. There isn't going to be forbearance on rents. That isn't going to happen again. If I was still a landlord and my tenants were flipping me the bird, we don't have to pay you, so we're not, and the bank is constantly looking to me for money, do you think in any way that my mode of operation won't change as to how I'm going to deal with tenants in the future? Yeah, baby. We're bright enough to be able to figure that shit out. You're not going to be able to pull that crap off again. So you need, as a 21 to 34-year-old, come into the real world and listen to what I'm saying. This crisis that we're going through now, it's going to happen again. You need to look at what if you were ready to retire today, if you had to retire today because of physical or mental or job ending or whatever, or you just were 65 and you were ready to go out, what do you want that to look like? I had that with my parents. I was in college when my parents retired. They retired when I graduated from high school. That's when my dad said, "No, I'm going to retire." And so I was able to see that. I was able to see that good money management, life money management, and the way you view yourself as a human being builds that retirement so that that life can be comfortable. It's not extravagant, but it was comfortable, and they didn't have to worry about their bills. When you retire, the only thing you have to do is figure out, a loaf of bread today costs me $1. In 30 years, when I retire, what's the future value of that loaf of bread? It ain't going to be $1. it'll be $10, let's say. So if I've got $100,000 in savings today, and that's going to grow at 3%, maybe. I mean, the 10-year bill right now is 1.46, I think, about 1.46% a year on a 10-year T-bill. So you're getting 1.4 in T-bills, and inflation right now is running 3%. How are you going to do? You're not going to be doing very good. Over the long run, real estate, stocks, used cars, tires, whatever you want to, they're all appreciating about 8%, 7.5% to 8%. Of course, you can go in the stock market and pick the wrong stocks and get wiped out. You can go into currencies and get wiped out. You can go into real estate and get wiped out. It doesn't matter. You got to know what you're doing. How do you learn how to do something? You find somebody that's been there and done that and has been successful for a long period of time. Not some asshole currency trader that's been out there for 2 or 3 years and you know, jumping up and down about all the money he's made. Has he made it from trading, or has he made it from selling courses and doing seminars? And oh, by the way, there's so many of these currency traders out there that got lucky, or maybe they were good currency traders and they made all their money. What are they doing with their money? They're buying real estate. They're buying other businesses. Well, they're going to lose their money in that because they don't know anything about business and they don't know anything about real estate. But why aren't they investing their money in their currency trading business if they're so confident about it? Why are they investing their money in building a big hoopla trading program? Why are they putting their money into building out trading rooms where they have other people coming in and paying $500 a month for a seat, or they're picking off 30 or 40% of the person's money? Why don't they just trade their own money? Because they really don't know how. And so they're investing in all these other things. Is that the person that you want? You better listen to somebody like me who did a 30-year career as an engineer in a job, who did 40 years in real estate investment and went through it. And I'm now going into currency trading. Why would you listen to somebody who's doing currency trading and is going into real estate? Why would you do that? I can't even imagine. Look, guys, stop whatever you're doing and look at that. What does that retirement look like? When I looked at my folks, no mortgage on the house, sufficient money to pay any bill that would come up, including medical expenses over what Medicare would pay, the ability to, if they wanted to, they could get on an airplane and go. Well, they put me on an airplane every school vacation, like a Christmas vacation, or summer break, or summertime during college. They put me on an airplane and flew me home so I could be with them. And if my brother and his family, when they were younger, they would pay their way and to bring their grandkids out. And they had the money to pay for the grandkids to come out to visit them. So you can't just, when you're doing your plan, don't listen to some of these planners that say, oh, you need 25 times your salary. Look, figure this stuff out on your own. Don't listen to these rules. You're going to need money to do. You're going to want to buy a new car. What are you going to do? You're going to want a car payment? If you don't have the cash, you can't buy the car. My wife just bought a new car several months ago. We didn't buy a Lexus. She brought a $15,000 used Impreza. I forget what year it was. 2017. This is 2021. So not too old. $15,000 for an Impreza. What? Does she need a Mercedes? No. No. What are you going to do with that? But she had the $15,000 to pay. Well, she didn't. She put, I think, $6,000 or $8,000 down, which she would have had, or $4,000, I think, which she would have had if she would have sold her car, which she didn't. I sold my car, and I'm driving her car now. What do I need? I don't need. I'll just drive her car. It's a nice car. It runs fine. But she just went to the bank yesterday, or maybe it was early last week. I think it was early last week. She went to the bank and wrote him a check for, I don't know, $10,000 or whatever it was, and paid the car off. And it wasn't, I mean, it was a 2% or 1.5% interest on the loan. Why pay the car off? It's free money. She paid the car off because she listened to me. Don't have any debts. Pay your Visa bill off every month. Don't have a mortgage. Don't have a car payment. Pay it off. Now, when you pay that car off, you still have a car payment. So she's going to be making that car payment, which was $150 a month, to herself, out of her Social Security and out of her savings, or whatever it is that she's going to be doing. She's going to be making that car payment into her savings account, so that someday, whenever that is, 4 years from now or 3 years from now, she'll have her car, which is paid off, and she'll have the $15,000 back. That's the way you do it. But you have to plan for this stuff. So take a look and project out what sort of yearly expenses you'll need in future value dollars. And then the amount of money that you're going to have today has to be growing at 7 or 8%, so that you can pull your taxes out of there, you can account for your inflation out of that money, and you won't necessarily touch the principal. It's okay to pull principal out of your savings after you retire. That's the point of having all that money, is so that you pull off the interest income and you pull off the principal. There's a wonderful book called Die Broke. I forget who wrote it. Sorry, whoever the author is to that. But he talks about that. Why die and have $1 million in your bank account? Why? You forego some of the traveling around the world and stuff to build up this big amount of money, so that you have it at retirement. Once you have it, what are you going to do with $5 million or $3 million? What are you going to do with that? You're going to live off the interest? No. When you get retired, you pull shit out and live the big life. That's when you live the big life, when you've got the money. Not when you're trying to make the money. You know, they asked Warren Buffett one time, what are you driving around in this older car? Why didn't you buy a new car? This is back when you could buy a car for $15,000, a new one. He said, why should I pay $15,000 for a new car? Do you know what the future value of $15,000 at 8% is? If I paid $15,000 for that car, that new car, that's the money that I would be losing. Guys, these are the rules of the game. I was lucky. I learned these rules when I was 21. Part of the reason I was able to learn the rules at 21 to 24 was because I had my parents to look at. I saw what the result of a successful life was. And don't give that bullshit as, oh, I may not live that long, or I want to travel the world now because when I'm 70 years old, I won't feel good and I won't be traveling the world. Yeah, but if you travel the world now and you get to 70 years old, you won't even be able to afford your rent. But there's ways to do this. I counsel people. Look, I've taught martial arts for 50 years at the grandmaster level. My disciples, I teach them this stuff. This is what I teach, is right living, right thinking. What are the rules of the game? And how do you get from point A to point B? This is what I'm trying to share with you. The reason you're not going to pay any attention to me is because you're not a martial arts student of mine, and I've built the trust up over a 5 or 8 or 9 year period of time which is about the time when I start sharing this stuff with my students. But they've already built in the trust with me. I had the trust in my parents. I could see what was going on. Who do you have in your life that you can say that you have that? How are you going to do your currency trading if you are not right thinking, right living? If you're not doing it for the right purpose with reasonable and responsible goals in mind so that you can work your way toward something. What are you working the trading for? You don't want to build a bigger account so that you can compound that and build a bigger account. Why? If you don't understand that, how are you going to correctly build that account? What are you working for? Just to build a big account? Why waste your time? Work hard at your job, save your money, and build a big account. That's the same thing. It's just that the currency trading will accelerate that for you, and if you do it right, the compounding will be just like the real estate, except instead of 8% a year for the appreciation, and maybe you get another 6 or 12% on cash flow and reinvestment and all that other crap. There's all kinds of ways. People will say, well, you could make, 13 to 15% a year compounded on your real estate. Well, yeah, you can, but it depends on what number you're using to compound and whether you're reducing your acquisition costs by paying down from your cash flows. There's all kinds of games that fuckers can play. But if you look at your real estate realistically, you're not going to have the cash flow when you go to sell it, because you've used the cash flow to either buy other properties or to pay for your lifestyle. So that property, when you sell it, less what you paid cash down for it, that's your profit. And divide that by the number of years that you held it. That's the real rate of return. So what's that real rate of return? I don't know. I've done a couple of deals now where I had $70,000 that I bought a piece of property for, and then 20 years later I sold it for $600,000. I don't know. Do the fucking math, and you can see what that real rate of return is. And I made as much money when I was working as a software engineer. I made almost as much money. About half, I guess, my software engineering salary, I made about half of that just as throw off net cash flow from my properties. And that net cash flow, that half of my engineering salary, was 100% of probably 80% of the folks out there that are working. Could I have retired 5 or 10 years before I did? Sure. But I really liked the software engineering. So I just stayed and was able to save, well, max out your 401k, company match, all that other kind of good stuff. Because I was having fun. If you're not having fun at your job, you're going to want to get out of that as soon as you can. So as soon as you hit 62, you're going to say, oh, I can get my Social Security now. Well, you're losing 25% on your benefit if you get out at 62. Instead of your full retirement age. So, if you're not making a lot of money now, if you're not making $70,000, $80,000 right now as a 21 to 34-year-old, if you're at that $30,000 to $45,000, $50,000 a year range, you're going to need the currency trading money, not only from a cash flow standpoint, but also from an asset appreciation. The money is an asset. It's growing. And as you grow your account, the cash flow that you can pull off of it is the same. It increases even though you're trading the same way. The problem, most of you are going to be thinking about this stuff unless you're under good guidance, is that you're going to be pulling that money off as you go because you're compounding what you have, and therefore you're growing that account, but you're also pulling that money. But there's a balance there. It all depends on what you're doing the trading for. Are you doing it to replace your job, or are you doing it to replace your job in 10 years when you early retire? So you got to figure this stuff out. That's the purpose of my channel, is to talk about the things in currency trading based on my life experience to guide you to the point where you get to 50 years old, you can retire. And you can be open-minded about taking risks in life, unlike a lot of the 50-year-olds that watch my channel that aren't traders. They say, oh, I can't do that, or I don't want to do that, or he's full of shit. I don't know. You have to determine that. And the only way you're going to find out what's right and what's wrong, if you don't do something right now today to change the way that you think so that you can change the way things come out, is that you'll have to wait until they come out to find out whether you were right or wrong. You can listen to somebody that can show you the right way, or you can figure it out on your own and see what happens in 30 years. That decision is yours. And that's why this video is spoken directly to you if you're a 21 to 34-year-old. If you're a 50-year-old and up, tell me I'm wrong. Tell me this isn't the right scoop. And hopefully, maybe some of you 50-year-olds and over, maybe you're not doing the currency trading, but you have the life experience, you've been successful in your business or your real estate or whatever thing it is that you do. Isn't this the way that you do it? Comment in there so that the 21 to 34-year-olds can say, well, maybe we should listen to these older people. You know, I was just watching or doing a internet thing on a website, the things that the boomers are should not do anymore because it's stupid. You know, don't wear the khaki slacks cut-offs and don't wear socks with your sandals and, you know, shit like that. You know, some of it was just stupid. Some of it doesn't make any sense. It was written by a millennial. It's stupid for the boomers to do this. There's a reason that we do some of the stuff that we do. And maybe we do stuff that's old school, like sending emails. Well, you know, when you get older, your fingers just aren't going to, your thumbs just aren't going to work on that little phone keypad. So you guys just keep punching away on your little keypad for as long as you can. And then when you break your fingers or they get arthritic or whatever, try that. Because you don't know how to type. It's up to you. But if you're choosing currency trading as your vehicle to achieve financial success, both in cash flow and asset appreciation for retirement, you'd better pay attention to the right way to do things so that you don't end up in the 90-90-90 club, 90% losing their money in 90 days or less. 90% of the folks lose 90% of their money in 90 days or less. You don't become a member of that club. Be a member of the 21-34 club that is paying attention to the life around them and is using this great thing called currency trading to build the future that you want. And right now, you have the capability to do that. In 10 or 15 years, they may change the rules of this market. They may up the ante price to get in, to eliminate a lot of you that have the opportunity now to get in for 5% on $100,000. For $5,000, you can trade a full lot. Or for $1,000, you can trade a mini lot because the margin's going to be $500. And that'll give you $500 of runway, right? That's what you can do right now. But there's so many people that are failing at this stuff, and there's so many people that are scamming out there. There's people on YouTube, you can watch their videos. Oh, just make 2% a day and you'll be a multimillionaire in 18 months. Oh my God, it's so stupid. Fucking guys driving around in rented Lambos and watches and flashing shit around. And then they say, well, you know, why own it when we can, when we got the cash flow to lease it? Great, great. You've got the business built, you've sucked enough people in to buy your stupid courses and all the other shit that you do, and now you're taking your currency money and you're investing it in real estate behind everybody's back because you know that the currency trading isn't going to last, because you really don't know how to do it. You get these trend lines here and you're going to trade between the trend lines. Really, get serious. Get serious. The rules may change, guys, and make it prohibitive for you to get involved in this in 10 years when you're ready. Right now is the time to do it, not in 10 years. I'm 72 years old. I got involved, I started learning this stuff in 2007. I was doing it as an academic exercise. I didn't need it to trade. I was a millionaire in real estate. I did it because I'm an engineer, and I investigated. I didn't open a mini account until 2012 and lost my money and figured, well, I need to do more study. I did all this study, and then in 2017 or 18, funded a $40,000 account, lost it. Because I listened to all these people on YouTube and took courses and stuff, figuring they knew how to do it. Maybe they know how to do it, they sure damn sure don't know how to teach it. Well, I know how to do it. Because I separated myself from all that noise and figured out for myself. There are people out there that know how to do it. You should pay attention to them. And if they offer courses and mentoring, pay them whatever they want, because they're going to guide you the right way. I'm not going to take on 1,000 people. I'm not going to sell 1,000 courses or take on 400 mentors that I have to drag across the finish line. I'm a prick when it comes to being an educator. This is the way you do it. If you don't want to do the work, fuck you. I don't care how much you want to pay me. I'm not even paying attention to you. Look, take this stuff seriously, and the way that you're going to be able to do that is project into the future what that retirement will look like based on the fact that you will live and get there, okay? And that you will be happy and you healthy, and that you can go on 4-mile hikes. My wife is 70 years old. She's out with the dog right now. They'll be walking 3 or 4 miles in the woods. Wouldn't you like to be able to do that? Plan on that. But start laying the foundation for that today. And I can't think of a better thing than currency trading. That's why I'm not doing real estate anymore. I'm doing currency trading. Oh my God. Rant over for the day. More coffee, because this is cold. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.